Hey guys, welcome to another Trade Genius podcast. Philip here with Bob Kulo. We're going to get into the central bank digital currency or CBDCs. We're going to give you our take on it and what it means for you. So let's dive into this video.
Trade Genius.
So Bob, it's kind of interesting. The Federal Reserve, we've been hearing mixed messages, but then all of a sudden now we're getting like the green light from the Fed, at least the New York Fed, that they're going to go ahead and test this digital currency program. I wasn't expecting to get something like this so soon, considering the macro environment. Were you?
No, absolutely not. I think they're panicking, Phil, and I think they're trying to make this a de facto. Maybe in light of what's happening with FTX, they figured, hey, maybe this is our chance to compare and contrast, saying, look, this is how you do it right, the digital asset world, and these guys like to make facts on the ground kind of a thing, and then say, okay, here it is, it's already here, so we might as well just keep moving forward with it.
Or maybe SBF was a plant to get all this going.
That's definitely where my tinfoil is. Who else comes from nowhere and blows up nowhere and still living free, and in fact, he transferred funds to the Bahamian government when he wasn't allowed to. Whole thing's a joke.
Yeah, it's the timing of it is really peculiar, right? But yeah, so basically the New York Fed and these other big banks are going to start a 12-week digital dollar pilot program with the Federal Reserve Bank of New York, and this is going to include Citigroup, HSBC Holdings, Mastercard, and Wells Fargo, among others. So it's a big operation. It's a test operation, but it's significant because, they wouldn't be bothering with these guys if there wasn't really some validity to move forward with something like this. And, my view on this is that it's just like Big Brother because they're going to have way more control over how you and I spend. They could even dictate what we spend what on, and, the nice thing about having cash is you can go to, whatever. On the weekend, you go to a garage sale, buy whatever. With a CBDC, we would be transferring funds with our phones and they would know every little nickel and dime thing that we spend on. And I don't think really we're used to that, at least in this country. And I think there's probably going to be some blowback. But it's interesting how they're approaching this, right, Bob? Because Kashkari, which is a pretty prominent Fed governor, says CBDC is a threat to privacy, defends regional bank independence. And I think we've seen enough in the more recent history with the central banks is that they tend to talk out both sides in their mouth, right? So you're kind of like your guards down on one hand, but on the other hand, the quieter headline is that they're going ahead with this CBDC test rollout. And so it makes me think that, yeah, they're telling you, yeah, we agree with you, it's bad for privacy, but too bad we're going to do it anyway.
Yeah, and look, Kashkari, he's controlled opposition, right? He's the foil. Make it sound like there's active debate inside the Fed. We've seen it enough with their interest rates call. What I don't understand is, aren't they digital ready? Can't MasterCard digitally move money to the Fed now? What are they really moving? Are they moving individual transactions over to the Fed to be stored? That's right. Kind of left unsaid. Okay, what do you need to tell? Look, I can send money to the Fed. It's called a wire.
Well, I think this becomes the open ledger concept like blockchain, like Bitcoin, right? Except that you have your individual transactions at your banks. That's why Kashkari was saying it's defending regional bank independence, because what their approach would be is that all your transactions ultimately can come back to the Fed and they can see every little thing, every little withdrawal that you do on an individual basis at a federal level, right? Without necessarily having, like, say, a special warrant to dig into your financials, right? And I think that's the scary part of, I think, where people get really apprehensive when we start talking about a central bank digital currency. At least that's my take on it.
No, and I was being rhetorical, really. I mean, look, they can get metadata today, right? I sent money to you. There's a transaction record, right? So now they want to know everything about the transaction. See, that's the part where,
yeah.
Why do you even need it? Why do you need a Federal Reserve? Why do you need to know that?
Why do we need a Federal Reserve?
Why do we need a Federal Reserve? Yeah. So this is pretty scary stuff. But, this is Janet Yellen. She's a WEFer through and through. And that crazy Klaus Schwab was out there lecturing the G20 about changing American dominance is over, and you have multipolar world coming, and trade is collapsing, and we have to have a new way of doing things. And look, these guys, this is progressivism 101. You're too stupid to know what to buy or to sell. And see, what I really think is going to happen first, Phil, is that it's basically the financial repression part of it, right? The reason why Japan was so successful staving off the basically hyperinflation of their currency is that they're homogeneous in their culture, and people had all their money in the postal bank, and they sucked all that out basically and funded bonds for the Japanese government. Here they could do a sweep of our account and say, oh, you're just sitting in a checking account. Well, you're not going to be sitting in a checking account anymore. You're going to we're going to sweep that to the Fed, and then we're going to sell bonds back to the. And oh, you don't get any of the interest rate from it. We'll keep that. I think that's how they're going to start it. They basically do this, just sweep. Hey, there's $12 trillion sitting in demand deposit accounts. We'll just sweep that every day, pay off the higher rate bonds, and then as you need your money, we'll give it back to you, or we won't give it back to you. So I'm sorry, we'll get that back to you when we can, And I think that's what's going to happen. I think they're going to sweep accounts. They're going to block transactions.
Yeah.
That say, oh, you know what, economy's overheating, so we're going to limit the amount of transactions for spending in these categories until we get it under control.
Yep.
And then it's going to go full on, Antichrist stuff.
Yeah. It sounds outlandish when we talk about it, but that's kind of how the dominoes fall, right? As things progress down this path. So it's pretty wild. My other thought on this was that the central bank is on its heels right now, because what have they actually done for everybody? Well, essentially they've given us inflation, maybe hyperinflation, if they don't get it under control here real quick. So they have all these smart people, and yet we're not in a good spot, and some of the decisions that they made, even going back to 2008 and the great financial crisis, haven't been net beneficial for us on the whole. It's made the wealth gap worse, right? And
what's the difference between FTX and the Federal Reserve? They enabled basically the left to spend money that they would not normally get, and basically bribe the American people into voting for them. FTX did the same thing. People just didn't know they were supporting the Democrats when they've done this. So I think they're both the same to me.
Right.
They're both money laundering slush funds.
Right.
For the powers that be to maintain power.
The only difference is that FTX couldn't print themselves out of the city. They didn't have the power to print, or you could even say counterfeit, right? Because you're just printing. And had they had that ability, they'd still be here. But
this is the reason why they hate Russia so much, because Russia won't play ball. Is that if you get the whole world onto a single system, and you got Russia out there as an outlier, right? You got to crush Russia, or everybody's going to put their money into rubles. You know what I mean?
Well, I think, and we'll probably do a video on this subject later, but I think there becomes an issue where a country or countries or a group of countries, the euro could back itself with Bitcoin, become a Bitcoin standard, basically. But there's going to be, if we start shifting toward that thought, it's going to be who gets there first, right? Because ultimately that could be the way you secure, going, and I think it has to wait for Bitcoin to plateau in value, but I think that's certainly a possibility when you start getting into these scenarios with like Russia and the ruble and reserve currencies, because Bitcoin's, it's politically, it's neutral and it's decentralized, right? So who's going to grab that piñata first?
Yeah, maybe you and I should go down and start house hunting in El Salvador.
Yeah, maybe. But I do think countries or group of countries that have a controlling interest in that are going to, a little bit of game theory starts to come into play with that. And that's where, we tell you guys, the price of Bitcoin is going to go a lot higher. Just give it time. And right now, it's probably going down first, but the speed in which Bitcoin recovers, it makes your head spin. And this is just a symptom of the bigger macro picture right now. But once we're out of this, and I think we get back to the easing ways from the Fed, and if you look at what's going on with the supply on Bitcoin too, they're flying off. I think there was 150,000 came off yesterday, Bob, which is something we never saw in the other cycles as we did our bear market cycle. It was always dumping lots of Bitcoin back on exchanges, and the exact opposite's happening. So guess what? When we come out of this, the bull market for Bitcoin on the next halving cycle is going to be a lot more ferocious, because it's just going to be a simple supply and demand metric. And especially if we...
And the float is going to be even smaller now.
Right. And then if you get countries and central banks, remember France petitioned to have Bitcoin approved as a central bank holding last year. So they're already heading toward what we're talking about. We're just kind of like being early with the headline here. But if you guys have to understand what that will do to the supply of Bitcoin and the supply shock that's coming, it's going to make your head spin. So these prices, you can get one now. You can get one whole Bitcoin now if you try. So,
Well, look at it didn't take the body wasn't even cold yet at FTX and TD Ameritrade and I think BlackRock. They're coming out with their own exchange.
Yeah, that's right. They know it's coming. It's not going anywhere. That's the thing, right? The bear markets scare everybody, and crypto's dead, and yeah, a large part of crypto is, but like Bob has said multiple times, and I agree with him. Bitcoin, you got to separate Bitcoin from crypto, and it's just becoming like this store of value that because of the immutability, because of the decentralized nature of it, there's not one controlling source or governing body over it. Is a big game changer. We've never really seen a commodity like this, especially one that's has a known finite supply that actually goes down in production. It's disinflationary. Every 4 years, half as much gets made every day. We've never seen anything like that. So the supply shock is very real. It's just you're gonna wake up one day and Bitcoin will be up 10 grand, 20 grand, and that's it. Like, you're not gonna get back into it. And I know we've said this for quite some time, probably at least since the last cycle, but that day is coming ever closer, and you're now starting to see the supply just get taken off the exchange hand over fist right now in a bear market. So I think what you're seeing is the institutional players they saw the Michael Saylor trade, they don't want to miss it the next time, and they're piling in here. And so, you just have to follow what's going on, what the smart money is doing, and it's just try to accumulate what you can in Bitcoin, because that is going to help hedge you against inflation.
Yeah, and look, I'm not even going to try to persuade you to get into Bitcoin. I think it's pretty self-evident that you should have something that's outside the banking system.
Yeah. Yeah.
And you have to understand too is that they have to shut you down. They can't shut it down. Okay. Right. So that's how powerful this is. And don't and they make fun of people and personalities that can do the same thing, because Michael Saylor's underwater right now. The pump guy, he pumped crypto and so you're going to have to get through all that noise. But that's when smart people, what did Buffett say? Excuse me. Buffett always says, you got to buy when the blood's in the street here. And look, I just think it's really interesting. And Phil will tell you, I'm not a rah guy on this stuff. But it's just clear to me that you have to have an alternative to this system that they're creating, because I guarantee you the powerful are already in here, and just in case what they're trying to do won't work, they're in. And so I just think it's a tremendous opportunity. And now that it's hovering at 6, look, they can't beat it down. They're trying like hell to beat it down, Phil. Can't beat it down. That was my tell. And that's when you trade, when something doesn't do what you think it should do based on the macro environment, that should get your attention. Why is this not acting like everything else?
Right.
And so, look, you invest a couple grand in this thing, and if it goes to $1 million, okay, so you got $1/3 million.
Yeah.
I mean, it's not like you have to, write the mortgage off in your house and all that goofy stuff people say. You should, it's drill baby drill on this stuff. You should have some money in Bitcoin. Period.
Yeah, I agree. It's like part of the 401k portfolio, right? And I'm not saying just go all in on Bitcoin. That's aggressive. Of course, I would probably favor that, but like Bob says, like part of your portfolio, if every one of you guys listening to this got one BTC, you guys are going to be ahead of the pack. I mean, if you just do the math on that, you would be a very, very tiny percentage of whole coiners. I call them whole coiners. Very tiny percentage of the global population will ever be able to claim that, because there's only 21 million hard-coded, right? About 3 or 4 million of those are deemed a loss because they haven't moved since way back in the beginning. So you really only, like what you guys see on the exchanges, we're about a couple million, maybe we're going to be under that soon in circulating supply. That's it. Like the US has 7 million millionaires approximately. If tomorrow all of them said, hey, called up their financial advisor, said, hey, allocate me 1 BTC, all that supply would be gone tomorrow off the exchanges. What does that do to price? That's called supply shock, and you will see a chart like you've never seen before in the history of commodities, and it's going to go straight vertical, and you won't be able to get in at that point. So I think there's enough evidence there for you guys to see the bigger picture here and what the smart players are doing right now. And yes, it could go down to 13K. We probably will bottom under 13K, but really what's, in the big scheme of things, when you zoom out on the chart, getting some down here or getting your allocation down here, you're going to forget about whether this went down $3,000, $4,000 more dollars or more, because once we get out of this bear market going into 2023 and 2024, especially. That's when things are really going to take off. And so this, gold, real estate, whatever you can find on a super good discount right now on a hard asset like those, that's what you really want to get into right now.
Yeah, and I think when they create this exchange with all those businesses that are forming this consortium are all backed by the Fed. Okay, so for me personally, would I want to deal with Coinbase or would I want to deal with TD Ameritrade where all my other money is? And they contacted me and said, hey, you can buy Bitcoin now and throw it in your portfolio, and I don't have to run through all these crazy hoops. And I just say, sure, I'm in. And oh, by the way, it's going to be wrapped in an insurance product as a backstop in case they run into trouble. I think, Phil, that's going to be the explosion. When it's so easy and convenient for an American just we don't have to do any of this crazy stuff. Oh, TD Ameritrade, they have futures, they have options, they have crypto.
Yeah. And next week I'm going to do a video, or we're going to do a video of where we're going to compare what happened with gold into the 2000s, because what happened then is they went into an ETF era, right? It was freely available to everyone to get into their portfolio. You didn't have to go to spot dealer or this and that or have institutional connections. And that's what's happened with Bitcoin now, especially when you can buy spot Bitcoin in your TD Ameritrade account, because that's essentially what's going to happen here. And they've already tested, Bob, remember when Thinkorswim had Litecoin beta testing the symbol? You couldn't buy it, but you could bring it up on the charts.
Yep.
And that'll be spot into your account, not GBTC, which is like a OTC fund that you're buying shares that they hold the spot. No, they're going to custody the spot for you in your TD Ameritrade. And so we're going to compare that, and you guys are going to be open your eyes to what happens when that happens with a commodity and it becomes freely available to the masses in a retail environment. And then you get your long extended run, and then you guys will see, I need to get some allocation here. So we'll cover that next week.
Yeah, now you know why the SEC is not approving any spot BTC funds, because these guys are behind the scenes saying, hey, we're doing something, and do not let these guys get ahead of us here.
Yep.
And by the way, our controls, our risk controls, and we're backed by the Federal Reserve in case we get out of balance with liabilities and stuff like that on lending. Is that I think this is going to be. And I just thought about that now too, guys. This is real timing for me. I'm like, it makes perfect sense. So keep an eye on that. Maybe we'll throw the link in the room for the next podcast, because that just popped onto my screen here today that they're thinking about doing this. I think it's very important.
Absolutely. All right, guys. Well, there you have it. There's our thoughts on CBDC and how you would basically look to get into other assets that are probably going to do really well as we go and transition through this weird time and all this different stuff going on. So let us know what you guys think about CBDCs. I kind of think what the comments are going to be, but we'd love to hear from you and hear your thoughts and how you guys are dealing with it. So thanks again, guys, for watching. Thank you, Bob, for your time. And I guess we'll catch these guys back on Monday.
Yep. Have a good week, everybody.
See ya.
Trade Genius.